Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Joining us now, the one person I want to talk to, we're commercial free here through the half hour. Good morning. Huge audience out on YouTube. Good morning to all of you. Lindsey Piegza joins us, who's pushed way against consensus and has said this is a Fed of stability or even rate increase. You look like a genius this morning. Are you going to look like a genius in 30 days for the report come July?
Well, I think so. Even if we did see a hotter than expected print in even the next one or two inflation reports, it's not going to be enough data to convince the Fed, particularly against very clear, tight conditions in the labor market. And the most concerning component of this report for the Fed is going to be that wage component. We continue to see pressure on wages as labor demand outpaces labor supply. And this is not something that's going to be fixed overnight. This is a rebalancing that is going to have to occur over months, a prolonged period. And so when we look to the Fed, who's telling us they need very clear evidence of disinflation, many months of that evidence, that says that while rate cuts may be eventually does appear to increasingly be a 2025 event.
You know, Tom, this Top Live blog continues to be my go-to when you get these big things. And here's something just posted there. The 272,000 payroll gain was bigger than every last one of the 77 estimates in the Bloomberg survey. So there you go. Lindsey, where's this demand for labor coming from? I mean, who's hiring all these people?
Well, I think it's pretty broad-based. There isn't one sector of the economy that's booming. What we're seeing is an overall steady level of expansion across several key categories of the economy. Now, again, I don't want to oversell what we are seeing in the labor market or the broader domestic economy, because we are starting to see somewhat of a rebalancing. Labor market conditions, absolutely, they're still tight, but they are somewhat less tight than what we saw, not just at the start of the year, but over 2022, 2023. So we are starting to see a rebalancing, but the problem is the overall impact or that rebalancing is occurring at a much slower pace than the market or specifically the Fed had anticipated. So again, still positive, but we are starting to see that second derivative decline.
I mean, Paul, how you get out the HP12C?
Yep.
I mean, if you got pigs on, you got to get out the HP12C. And I do the 3-month moving average, which in March was a big number. OMG, April was a lesser number. And now we just got another big number. Lindsey, I'm rocking 250,000-ish over the last 90 days per month. 6 years ago, that's a boom statistic. Are we in a boom labor economy?
Well, I do caution against reading in too much to the headline payrolls number, because we are starting to see somewhat a divergence between the payrolls and the household survey. Payrolls are consistently reaching new highs month after month, but the household survey really has shown somewhat of fatigue, plateauing over the past, I would say, 6 to 8 months. The disconnect, of course, reflecting the fact that we consistently undercount the working age population, particularly now as we see these large flows of immigration coming into the economy, legal and illegal. But also what we're seeing is this shift in the demand or the type of jobs being created in terms of full-time versus part-time. Now, I haven't dug into the details of this report specifically. Last month was almost entirely full-time. But if we go prior to that, 6 to 8 months, that was almost entirely part-time employment, which, as we know, part-time hires typically have more than one gig. And then, of course, you're counted more than once in the payroll report, which could artificially inflate that number. So again, still positive, But I do think there's some underlying signs of the economy starting to cool, that rebalancing, as I mentioned.
So we had 4.1% average hourly earnings year over year. 4.1%, that's well above the 3.9% consensus. Last month was also revised a little bit higher. Wage inflation, is that a thing?
Well, it's certainly a concern, absolutely. And it's a concern not just for the Fed, but wages. Surprisingly strong wage data for the BOE, the ECB, that was also noted as a concern for the pathway going forward. So even as we see some of the supply side components providing ample relief to inflation, as economies reopen, trade lines come back online in the aftermath of COVID, what we're seeing is some of these variables under the purview of global central banks are showing less improvement, as we have allowed, in some ways, inflation to become entrenched in the economy, with central banks sitting on the sidelines and allowing above target inflation for a long period of time.
Lindsey, when you were taking your PhD, you had the unenviable task of studying the terror from Michigan, Claudia Sahm. And of course, Claudia has been forceful that we don't have enough evident data for recession. Clearly, she's been right. She's on with us in a moment, folks. Clearly, Lindsey Piegza has been right that the economy is much better. But how bifurcated is the economy now between the haves and the have-nots?
Well, I would push back. I don't think the storyline is between the rich and the poor, the have and the have-nots. I think the divide is between the asset holders and the non-asset holders. Because what we've seen is while the average American household is still out spending, they are feeling pain from higher prices, higher borrowing costs, the resumption of student debt payments. But there's another category of consumers that have experienced a massive increase in net wealth to the tune of $12 trillion over the past year. And that's possible thanks in part to this massive increase in asset prices via the equity market, via the housing market. So when we paint with a broad brush, the consumer remains resilient, that's very much true, but the level of resiliency is very much divided between the asset holders and the non-asset holders in this economy.
Lindsey, thank you so much. Dr. Piegza with Stifel here, and of course, she's done a yeoman's job of pushing against they're going to cut, just saying everybody calm down and wait for the data. To let you know where we are now, we've got Claudia Sahm coming up in moments. Because of, is it Roaring Kitty? Do I have that right?
I don't know. At least
Jess Menton's going to brief here.
Kitty.
I was like, why do we need to talk to Jess Menton about Roaring Kitty? And the answer is we've gone from 67 to 36. We're now breaking down to a new low this morning. So we'll get to Jess Menton on Roaring Kitty.
GameStop down 23% pre-market trading time. They had some news that they filed to sell up to 75 million shares to take advantage of this, what had been 160% increase in the stock this year.
Speaking of Hello Kitty, Claudia Sahm joins right now with her cats that she herds on a weekend basis. Claudia Sahm, of course, providing all sorts of important economic analysis, hugely influential right now with New Century Advisors. Claudia, you nailed it. Everybody's saying Claudia Sahm's right, recession, and you're like, wait for the data. Is this enough of an oomph positive jobs report where you're not looking out to the first week of July, but you've got to get out further to get any kind of caution on this economy?
This is good news today. Jobs days have been good news in the past couple of years. We see a resilient labor market. We have had a job-full recovery for the first time in a very long time, and that's good. So, I understand that sometimes markets think good news is bad news and it's bad news for the Fed. Yeah. No, this is good news for the Fed. People have jobs. This is good.
I mean, the Fed, starting with, they look like a genius right now in terms of the parlor game, which I don't care about. But the overlay of that is a sub 2% GDP growth. Is that embedded into your study now, where you're looking at finally real GDP growth actually pulls down?
So I will channel Fed Chair Jay Powell and say we look at the totality of the data. Right, we have to bring all the pieces together. You can't just look at the labor market and say recession or not. I don't lean just on the Sahm Rule, and it's my rule, right? So, and it's very important, a couple of pieces, always look under the hood, right? We need to see the consumer keep going. We need to see the businesses investing. We've largely seen that. It's going to be bumpy, and never take 1 month and run with it. Like, we really have to look 3 months, 6 months. And if you do that story, you've got the moderation. Today is not throwing that off, but it's a good moderation. It's a sustainable path we are on.
Paul, I'm going to go, the 3-month moving average is like 250 on non-farm payrolls. Solid. 10 years ago, that was a boom economy.
That was a boom economy. It looks like we're fully employed, I guess. Let's look at the wages here, Claudia. We had last month revised up a little bit to 4%. This month, it came in at 4.1% on an annualized basis. Is that wage inflation? Are we looking at the wage inflation there?
We have seen no evidence of a wage price spiral through this entire cycle. And if you didn't see it in 2022, there is no story for it right now. Again, we need a resilient economy. We need paychecks out there so people keep spending. The Fed is going to wait. That's just kind of how they roll. So we want to make sure that that patient side does not take us all down. And it looks like they got some resilience, and that's good big picture, not just for the Fed and their waiting game.
So, Claudia, how do you think about the immigration, both legal and illegal, and how that impacts some of the data we've been seeing over the last, 6 to 12 months? It seems to be getting a little bit more play out there.
So first, from the lens of the economy, the immigration, the pickup in immigration to this country has been good for the economy. We had widespread labor shortages, and those really, by and large, are taken care of. Wasn't just immigrants. We had women coming back strong. We had other people and marginalized groups coming in, but we needed workers. They weren't displacing workers. They were filling jobs that weren't getting filled. That's good. Of course, bigger picture, there's a conversation to have about how we do that in an orderly way.
Right.
Now, so that's the economy. Just what you asked about with the data, throw one more measurement challenge at the Bureau of Labor Statistics. Right, like it is just very hard to survey these people. They might show up in household survey, they might not. They might show up in establishment survey. Right. So, but we have a lot of things that are making the data hard to read right now.
A threat to society, Paul, is always an economist that pulls out Merriam-Webster. Claudia Sahm, with a blistering essay for Bloomberg Opinion here in recent days. Claudia Sahm on inflation. What did you learn in your study? I mean, of course, you have to quote University of Michigan statistics. I get it. It's the franchise out there. But Claudia, what is the character of the inflation into this summer?
Right. So the point of the piece was, yes, there is, when we talk about inflation, people are upset about inflation, and economists try and convince them, no, it's getting better. This is more than economics, right? Because we are talking about the same thing, an increase in prices, right? That is an economic phenomenon. But there's a lot more that's getting wrapped up in inflation. And if we're going to have a productive debate, we need to get the economics sorted out, put the economists in that bin, and then there's another discussion and bring in other experts. Like, let's stop pretending this is all about the economy.
So, Claudia, where does this Federal Reserve go from here? It sounds like, and I'm looking at the market here, boy, they can just wait, no problem waiting here, and maybe even into next year.
The Fed has a dual mandate. So regardless of what the Fed, quote unquote, can do, the Fed, when inflation is back down on a sustainable 2%, they're supposed to be out of the way. Their goal is not to lean on, nor is it their mandate to lean on the economy as long as possible. So I think that's, today is a good day in saying, hey, we're not careening towards a recession. That could lead to really fast cuts, very disruptive. Right. And yet, I don't think there's anything here that says, oh, the Fed's going to wait until next year.
Okay, Claudia, I got one final question. We need to go to Claudia Sahm territory.
Yep.
Claudia Sahm, you know that the Science Diet CD stress bag for cat food, it's a moonshot. It was $100 for an 18-pound bag, and that puppy's popping $114. I'm seeing the same thing for vet bill and kennel fee as well. Claudia Sahm, you're seeing inflation in your cat food. Discuss.
Yeah, so I think I'm doing what a lot of Americans are. When things get more expensive, you go switch to a cheaper brand. Puffy, my kitty, she's more than happy to eat dry Purina cat food. It was on sale last week.
There we go, Dr. Sahm.
Dr.
Sahm, on the substitution effect. Puffy is Purina cat food. Jess Madden's going to walk out of the studio. Dr. Sahm, thank you so much for joining us, and congratulations. Without question, the most influential academic economist. One of our interns, Bennett, killed it today with guest sequence, because right now we're going to look much more, almost philosophically, at what this boom labor economy means forward for your investments. Nicholas Colas is co-founder of DataTrek Research and joins this morning. You know, Nick, there was a phrase from another time and place that it's a morning in America. I guess it's a morning in America for a select group. How narrow are the haves right now in America? Bang up jobs report, bang up consumption. We see it across the tri-state area. But how are the haves doing as we go into the summer?
Certainly the haves are having it all. I mean, it's a very good market. It's a very good economy for the upper 20% of the income distribution. But let's be fair, it usually is, right? The wealthy tend to have an easier time of it. The bottom 80% have not had an easy time of it. And we see that in data like gasoline consumption, for example. Gasoline consumption has actually been down year over year for the last 2 months. So as much as the top 20% are doing well, there is a lot of stress in the broader market.
Paul Sweeney, bank rate 30-year mortgage, 7.56, April 25th. And in 2 cups of coffee, we're down to 7.25%.
Yeah. It's still not where we needed to go for a lot of folks. So, Nick, given some of the economic data we've seen, and we've got a Fed Reserve that says it is data-driven, how do you think the Fed plays it out over the next several months?
I mean, it's pretty clear at this point. This jobs report doesn't leave a lot of room for interpretation. Let's put it that way. The economy, labor market's still strong. Demand for labor is still strong. Wages are still strong. They have to, at best, be on hold. Which will be interesting to see how many dots or how many cuts they put into the dot plot next week. I'm guessing it's 1 now, not 2. And they've got to play it pretty close to the vest and acknowledge the fact that as much as they want to see the economy slow and wages slow and inflation slow, it's happening only slowly.
Right. Nick, we see the 2-year Treasury moving higher by 12 basis points today to 4.84%. But we've seen all year this equity market can perform with rates at those levels, even a little bit higher. So how do you think about the equity market for the remainder of this year?
You know, I think large caps certainly still fine. The S&P 500, absolutely fine. It's up, call it 12% year to date. In the face of higher rates, as you point out, we've got the Gen AI story, we've got NVIDIA, we've got all those things pushing large caps higher. Small caps, not so much, right? Russell's up, 2% year to date? It's telling a very different story. It's telling a rate-sensitive story, as it always does. Very good for large caps and kind of not for small caps.
Nick, there's such a respect on the street for your research across assets. What is the character of this bull market?
The character of this bull market is very narrow, relatively speaking. Actually, we just did a piece for clients last night looking at the whole decade's return so far, all of the 2020s. Because let's face it, it should have been a really bad decade. It's turned out to be a pretty good decade, but it's narrow. So it's Lewis large caps, not small caps. It's Europe is doing okay, but emerging markets are not. For every India, you've got a China. So it's a very narrow rally, and obviously bonds have gotten destroyed for the last 4.5 years. Going forward, I think it'll still be narrow. It's going to be narrow till U.S. large caps, U.S. technology, and hopefully we get enough of a pullback in rates to get bonds to work.
But I can't say enough, Paul, how this is a Nick Colas difference, and that we have so many people rationalizing a destroyed bond market, price down, yield up 4, 5, 6 standard deviations, by looking at spreads, looking forward, forget the past. And what I hear in emails and on YouTube, so many people are underwater in some way or form with bonds.
It's tough to claw back to what happened from 2022. But Nick, I go out and buy a 2-year Treasury. I'm getting near 5% here today. What's wrong with buying some fixed income here these days?
I think you're right. I think it's a great trade. I think 2 years are probably the easiest trade on the planet right now, 5% risk-free. No need to worry, no need to fuss. Maybe U.S. equities do 10, but you're getting 5 for doing absolutely nothing and taking no risk. So 5s feel pretty good. The interesting part of the curve, obviously, is 10 to 30s. What do we do with TLT, or the longer end of the curve? And I think you can own that section of the curve here. I don't see inflation ricocheting higher again. And I think you'll make a little bit after inflation, even at the longer end of the curve.
Hey, Nick, so in the equity markets, you talked about the breadth or the lack thereof breadth. I mean, I learned in business school, that's not a good thing. I mean, doesn't this market have to see a broadening out here, or we're set up for maybe a big fall somewhere along the line?
You know, it's a great question, and you're right. I mean, the classic theory is, you want rallies to be broad-based. We just don't have a broad-based equity story right now. We have one thing. We have generative AI. We have one stock. We have NVIDIA. And so the philosophical, or the fundamental leadership here is sound. It's a good idea. Gen AI is a powerful trend, but there's not a lot of ways to play it. So you have a very narrow set of leadership. It's basically, as we all know, 5 names. So I don't think that's necessarily unhealthy, but it does mean like small caps aren't a way to play Gen AI. There's very few Gen AI plays in small caps. You got to go large caps.
Nick, on a reading list this weekend for all of Wall Street's Michael Mauboussin over at Morgan Stanley doing a wonderful study. I've already read it, folks, on concentration in the market. Nick Colas, how do mere mortals, I mean, forget about the phrase, a carefully diversified portfolio or balanced portfolio. All this mumbo jumbo from 30 years ago. How do you partake, Nick Colas, given the concentration that Michael Mauboussin writes about?
Yeah, well, first of all, I've known Mike for 30 years. He's a genius level intellect, and that's a great piece to read. Putting that aside, what he says is, the way the stock market's behaving is rational. We are getting a lot of profit growth in technology and generative AI kind of themes. So it doesn't say it's fairly valued or over or undervalued, but there's a reason why stocks have worked out this way. And the question is, will it continue to work out this way? Will we have this concentration of returns? And the short answer, I think, is yes. Where else does human innovation kind of hit the fulcrum point of profitability harder than in technology and Gen AI? That's why tech works. That's why the stocks are working.
Nick, don't go away. I got to scream out on YouTube. They're like, Tom, give us a data check here with all that we've done here with the labor secretary. We missed that. Here's what you need to know, folks. Futures were negative 20. They're now improved. Negative 12 off the shock of a boom jobs report. The VIX 12.83 as well. NASDAQ doing better, down only 0.2%. The Sweeney yield 4.84% on the 2-year yield. The 10-year real yield 2.11%, up a solid 10 basis points. I got to bring it up, Paul. I mean, we're going to get an $80 print on Brent crude.
Yeah.
I mean, we were looking at $69 in West Texas.
Yep.
Intermediate didn't get there. A little, lift oil here in the last couple of days.
Tom, I got to ask Nick this question. Nick, you're at Haverford College. You call up your parents and you said you want to major in Near Eastern archaeology. What did they say to that?
They were oddly accommodative. I got to give them a lot of credit. They said, do whatever it is you want to do. And I think it's because they knew me well enough to know that wasn't going to be the end point for my career. They knew that ultimately I wanted financial success, and I wasn't going to get that as a professor. And so they kind of trusted their judgment, and they were absolutely right. It was a great thing to major in.
And then Nick barbelled that. He saved the day by getting his MBA from the University of Chicago.
Yeah, that'll do it.
Yeah.
So Nick, we're going to walk away from you here right now, but let's get one final question in. Do you suggest in the Near East that Iran will continue with a theocracy, or can they find their way back to a more representative government?
Oh, police states are very difficult to unseat, unfortunately. I think for the people of Iran, they're going to have to live with that government for a while longer.
On international relations, Nick Colas. Thank you so much, Nick. Greatly, greatly appreciate it. Got to get through the newspapers, folks, because Paul's completely bent out of shape about the song we're going to end with, so we got to explain that. Your daily look at the front pages with Lisa Mateo, brought to you by Interactive Brokers. Interactive Brokers, they charge dollar. Margin loan rates from 5.83% rates. Subject to change. Learn more at ibkr.com/loans. /compare. Lisa, what do you have on a Friday?
Well, we got the Associated Press. They're saying the number of zombie companies on the rise. We're talking about companies, so much debt, they're struggling to survive, barely able to pay even the interest rates on their loans. So here are the numbers, Associated Press analysis. The numbers soared nearly 7,000 publicly traded companies around the world, 2,000 in the U.S. alone. And that includes like companies that run Carnival Cruise Lines, JetBlue, Wayfair, Peloton. So these are big companies.
Yeah.
And the AP is saying a lot of them won't survive because the dates are approaching when they have to start paying those loans. And they might
2 years ago,
it.
Paul, my theme for the year was a great zombie roll-up.
Yep.
Maybe I was early, but here it is.
Yeah, you've got companies that have higher levels of debt, and they have them at low rates. Now they got to refinance these things, and the rates are so much higher here. It really calls into question their ability to pay interest, to pay the principal, and all those types of things. So it's not unusual in this part of the cycle, but here we are.
And if they go bankrupt, that's even worse because they have all these workers, and that becomes
but the
a bigger
debt's here.
issue
It's like the commercial real estate, the office buildings, Class B, Class C.
Yeah.
You know, you extend and pretend, and you wait until you can. I mean, I wonder over the weekend, what will we see nationwide in foreclosures and the other things?
But a company like
real estate.
Carnival Cruise Lines, they will earn their way out of it. Like the market doesn't have any concern about a company like that who's got growing.
Have you ever done that? Like the 15-story tall cruise? I was in Venice once, and one of those boats went right by, just like in the movies.
Massive.
It was to me, it was rude, but there they are.
They're huge. Massive.
Next.
Great business.
Do it. You were just talking about this, the NBA and the broadcast rights and all that. So this is kind of a sidebar. You had the NBA commissioner, Adam Silver. He said the league is going to turn to expansion, probably go overseas, beyond the Toronto Raptors, go beyond.
Right.
After this whole TV deal thing works out. He said he's thinking long-term. Mexico City actually considered a contender for a new NBA franchise. But you'll have a lot of people who are interested in owning teams. If LeBron James retires, LeBron James could be a part of it. Shaquille O'Neal says he's expressed interest in ownership of teams.
I mean, what's interesting here, Paul, and let's go to row 4 at the Knicks game where Paul Sweeney holds court. And the answer is, will it dilute the game? I mean, are there enough players out there to do NBA expansion?
There are plenty of players, particularly internationally, Tom. So many players in the NBA come from Europe in particular. I mean, they could start a league. The NBA could start a league in Europe tomorrow. That's how global the basketball league is. Basketball
so you mean
so much more global than even American football.
A separate league, or London plays New York Knicks?
I don't know. I mean, I think the logistics there would be very difficult. But I'm just saying that the basketball as a sport is a global sport, more so than, say, American football. American football, you bring that over to London, they've been doing it for years.
I've been in a bar.
It's fine. I mean, it's fine. I mean, people like it, but
perfect.
They don't. But in Europe, Spain, all over, it's a global business.
I've done the NFL just outside the Tower of London in a bar selling to Americans, and it's just not. I mean, it's foreign.
Yeah.
That's all there is to it.
Yep.
What else do you have today?
So the New York Times talking about concerts and if they're starting to die out. You had Jennifer Lopez, she canceled her concert. 2023, it was a good year, right? You had Taylor Swift, you had Beyonce, Drake, Bruce Springsteen, he was 2023. But there have been cancellations. Some sales are slowing. You had Coachella, those tickets normally sell out, but there were still some available when it opened. So they're saying that the market for concert tours could be slowing, but other people are saying, you know what, it's good. Live Nation is saying so far sales are up from the same point.
Well, what do you think? I mean, when you go to see Bruce, what's the night cost you?
Oh, it's
car.
It's
dinner.
Merch. It's crazy, but it's a once in every 2 or 3, 4, 5 year type thing. So you just blow it off. But I think the issue for concerts, Tom, was that was one of those businesses coming out of the pandemic when we switched from just buying goods like Peloton bikes to experiences. And one of the big experiences was going back to concerts. And that we've had 22, 23 were just blowout years.
What I learned on this week is Liz Ann Saunders is never going to see Taylor Swift.
No.
She, maybe she'll see Black Keys or something with an edge to it. But the major thing we learned on surveillance is Liz Ann Saunders is not going to be in Paris with Stephanie Rule and Mohammed
Stephanie Rule was there. She had a whole big...
Watching Taylor. Yep. I think Lisa was there. She just won't admit it. What else do you have this morning?
This is for Tom.
Summer sleepaway camps. Okay, this is what we're talking about. Not sure if you ever send your kids over to summer sleepaway camp, but moms and dads are dishing out even more money. They're hiring people to pack for them, to pack their kids.
Oh, please.
So the sleepaway camp itself is like $15,000.
Out of control. Fortunately, Paul has to talk about a song to save me. This is a total American scam.
Yep.
In America, you basically pack up the bedroom and move itty bitty to camp. It's just ridiculous.
Yeah, Damien was talking about this just the
I'm
other
honored
day.
to say that Afterthought will be going to a camp in Scotland. Wow. And basically the page is they may bring one knapsack and one suitcase.
That's it.
That's it. That's my kind of camp.
Oh, see, the problem is these camps now, they have like 100-item lists.
The packing lists
The
are just
packing list is
unbelievable.
crazy.
Unbelievable.
So they're hiring these organizers for like $125 an hour to get them there and also to pack them when they come back. So that way the kids have their stuff packed, their laundry's done, they come home, mom just opens up the case, and that's it. They can spend more time with the kids.
Lisa Mateo with the newspapers on a Friday.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.